Hello. Hello, hello. Wait, what happened? Left the kitchen 5 minutes ago, but with the little it takes a while to get to the office. Unbelievable. Unbelievable. I cannot believe this rubbish. I cannot believe this rubbish. I thought I was coming to hang out with peace, No, straight to violence. Anyways, Ashimir, the S&P isn't quite pumping yet, but we shall see. Maybe that's a good thing. Maybe that's a good thing that we're selling off now, you know? So 595.56 all time high. And then Tesla 599.75. I bet you there's a whole bunch of people selling right before 300. Gary, do you still have your position for Tesla? I hope you do. I hope you do. Archer, good afternoon. Hello, hello, hello. Peace is out of reach for you, sir. Unbelievable. Well done, Gary. That's like your only one stock position. And then MKTW had some hype. The chart looks interesting too, doesn't it? Like, this looks like an interesting chart. You can see why there's a bit of volume there. You can see why there's a little bit of volume. So good swing. So the SNDs. SND. What's SND? Anyways, let's go, Gary. I'm gonna set an alert for this one if it ever finds a way to break out. Let's do right there. Let's do right there. Okay. Bunch of 640 for March today. You bought those calls today, Dan? For March 640? Can you imagine the chaos? Ish. Dan does that a lot though. Dan does that a lot, and he often cooks with those. Dan was buying 600 calls like a few months ago, and look at where we are now. Which is cheaper for that time frame? Probably the puts. Probably the puts. Just guessing by just judging by the sentiment in the market, puts for sure. So 6 minutes to go, guys, and then it's Fed time. 6 minutes. So let's see what the S&P does. Hello, Larry. Hello, hello. Puts. Yeah, Raven wants the puts. The puts. No, I don't think Dan is rolling a dice. Yeah, for March, yeah. I don't think Dan is rolling. Shish. He's I bet you Dan spends monies there, Joe, on those calls. 640 is technically not that far away, so for March, I bet you those calls are expensive. Expensive. They're not cheap. Yeah. Yup. High impact in 5 minutes. 5 minutes. La 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 la. Okay, perfect. No cuts. No, we don't know yet, but the expectation is cut 25 points per van. I don't know. I think there's a 99.9% chance they do a 25 cut. So yeah. For 468, yeah. Not cheap calls. Yup. Yeah, but then at least that's the expectation from the just just the vibes around the market is that they're gonna cut by 25 points. So yeah. And Delta. Yep. That's the high roller room. Yeah. Yep. Uh yeah, the Raven. Yeah, Raven doesn't do the no, I do the way Dan does it. I just don't go as far out as he does. I don't really play like the the same days. Um I play like 2 weeks out. I always look for like a month out at least for spy calls and whatnot. And then Dan will go out like 3 to 6 months. And then Raven and Virus, ooh, we same day. Same day. With the day, Trevor. Small gains are good. Perfect. Yeah. Hoping for thousands and I guess land. Yeah. Yeah. Do. I trade on the 4 year chart. Yeah, Gary just diamond hands, guys. Gary just buys BTC and diamond hands. He looks at the 4 year cycle, like, oh yeah, squeeze incoming. It's gonna take 4 years. Will the gap fill for SPY? A gap fill? No. Eventually, at some point. Today's not the day, though, Pavan. Today's not the day. I almost don't expect the S&P to do anything crazy. Ayo, Josh. Ayo, ayo. I really don't expect the S&P to do anything crazy, honestly. Right? It's 25 points if they cut that. And the market clearly has a lot of upward momentum. So, yeah, even if we do sell off when he's done yapping, we're just going to end up going right back up. Yeah, we've seen better cuts. Exactly, Joe. So, what's up, Paul? Ayo. Anyway, so yeah, we're waiting for the S&P and for Powell to start yapping. So we actually have 1 minute, guys. 50, yeah. So 50 seconds. 50 seconds before the decision comes out. Sell off and then pump. That's what you're hoping for. Yeah, that would be good for a lot of people, right? Dip and then send it. Dip and then send it. You're just looking for slaps. Yeah. Are you ready, Raven? Yeah. Everybody just wants a dip. Everybody's like, please give me a dip, please. So let's see what happens with that already, and then obviously we have BTC as well, right? So BTC's been cooking. Bitcoin just hit new highs not too long ago, 76,824. So pretty impressive. So Bitcoin obviously will have a reaction as well as the market. So let's see what happens here in. Wait, what? See what I mean? Like there's barely even a reaction unless something's delayed. Unless it's delayed, like this, all of this stuff, there's nothing new here. 25 points, everybody knows that. Market has priced it in. So let's see what happens. Like, look at that. It's like up, down, pump, dip, and it was still in the same spot. Ooh, ooh. Yep, we're just kind of like the market's like, okay, now what? Anyways, I'm gonna pull up CNBC so we can look at the headline, but yeah. Dan is gonna post it before me. Nice, 25% cut. 25, yeah, exactly. There you go. There you go. Wait, why does it show the name so much bigger now? Uh, am I streaming like in a new in like in the metaverse or something? Why does Yeah, look at that though. We're still in the exact same spot. Hmm. It almost felt different, didn't it? Anyways, in 5 seconds, 46 points. Yeah. Yeah, yeah. AODD. Lots of stops getting cooked. Yeah. But again, so 25 points, guys. Like we said, there's nothing new here. We all knew this was coming, right? So interest rates by a quarter point. I don't want peace. I want problems always. Second rate cuts on Thursday, moving at less aggressive pace than the cut, continuing its effort to right size monetization, monetary policy, blah 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 blah. Anyways, there's really nothing else that's new here. The community charges risk achieving. Yeah, so Powell is gonna read all of this rubbish when he's speaking. So, there's something about Trump in there. Uh, a stunning victory. Okay, that doesn't really give us anything new. Okay, whatever. So yeah, 25 points, guys. Right? Surprise? No. Stop that 25. You take that, Raven? Monies. So Bitcoin is dipping a little bit, just as the S&P had these crazy candles. Right? So now we wait for him to start speaking in 28 minutes. Luna's done really well today. Really, really well. Yeah, I think yeah. So Dan mentioned it, a few hours ago when we were on stream. It's been creeping. Oh, creeping. I think we actually yeah. My Luna chart is messy. It's because I used it for one-on-ones today as examples. Anyways, yeah, Luna looks good, and Spy is still confused because it doesn't care. Well, nothing major. The only other thing that's going to move the markets going forward is if they do a more aggressive cut or if they don't cut at all, right? If they're like, we're going to leave it the same, the market's going to be like, come here. What did you say? Say it to my face. Say it to my face. Yeah, 11%. Yeah, 19% now, Dan. Impress the new boss? Probably. Probably. We're going to dip a little bit and then send it when he's on, right? BNZI for a swing play. A swing play. Let me take a look. It looks like CELU is curling, isn't it? Trying to. Trying to. Let me take a look. Yeah, that's the one from this morning that was just super super weak. BNZI. Low float. Yeah, they had the news this morning. Look at that nasty drop at the open. This is why, again, guys, like if you don't feel confident at the open, stay the hell away. Stay the hell away. And honestly, this thing was weak the entire day until it consolidated at the bottom. So like off 165, perfect. Yeah, perfect. Um, let me just look at what the daily. Let me see what the daily looks like here, because it looks like it's coming off like 52-week lows. Yeah, like all-time lows. 166. Wait, did it hit all-time lows after the news came out? Damn, what a stupid scam. My goodness. How do you do that? Oh, that's why it's red for the day. How much time do we have? We have 2 hours left here before the market closes. Um, yeah, as a swing, you want if I wanted to swing this thing overnight, not bad at all. Like if you got it anywhere close to 170, that's perfect because then you could just set a stop loss right below. But then as a swing, you want to see that thing continue to show a little bit of like, upward momentum into the 177. Yeah, that's not bad. You're green now and it's failing at the 200 right below 190, which is again to be expected. But yeah, you just want to see some like upward momentum into the close. If it's doing that, then yeah, easy swing. Or if it's holding again 170, easy monies, right? But if that thing is breaking down into the close, the only reason I say that is because we have 2 hours to go and anything can happen. So you don't want to say swing and then in the last 2 hours it's breaking down and it's no longer a swing and then people are still holding. Uh, changed its um yeah, like the whole look at Gary's face, guys. Criminal. The S&P, no, Spy is still right in the middle. Spy is right in the middle, right in the middle of the, when the news came out. So it's waiting for Big Daddy Powell to pump it. Yeah, that looks interesting though. And then CLEU popped all the way to 490. Wait, did it pop to 490 on that candle? Damn. Damn. Yeah, that was a good curl though. 370 to 490. Good pop. Tesla still looks nice. Tesla looks like it's only a matter of time before it's above 300. So it dipped all the way to 295 and then back to 298. And Spy is gonna end up cooking back to the highs, the usual. Don't forget to smash the like, guys, if you haven't already. Please and thank you. Share the link, hit that subscribe if you're new. All the other stupid things. There goes the S&P, guys. There's only one course. That's the 600. Ah, my goodness. So some calls back in late October. Yeah, just cooking. Now look at it is cool the way the pictures look though. I think it's because so before I came on stream, there was something about an update on the streaming software. So I think that's the update. Now you can actually see people's faces. Like you can see Josh's face smiling on the bike. You can see the smile all the way through the helmet and the glasses and the sunlight glare. You can see the biggest smile. And then you can see that Gary is a criminal. Unbelievable. Hell yeah, I was smiling. Yeah, you can smile a little more when Bitcoin goes above 100. Around the corner, Josh. Let's go. Look at CLEU. Came all the way back down. Crazy. Luna's about to break $10 there, Josh. Dan. So 4 pennies away. Did you get into calls? Yep. The destination is 600s. Let's see if Powell helps with that. Or yeah, let's see if he helps. La 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 la. There you go. 595. And there it goes. Give us more green candles, please. And then take Bitcoin with you. La 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 la. Uh, Tennessee. Yeah, you know who wishes they were there, Josh? Dan. Unbelievable. Yeah, those calls would have been yeah. So that was, I bet you Raven bought closer to 594, right up the view up there. Now we need to break above this 595 15-ish for you, Shamir. Ready? So you're hoping when Powell comes on, he has something nice to say. Otherwise, it's a problem. Yep. Yeah. Again, so for anybody that's surprised that we're not getting a whole bunch of movement, this was already priced in the 25 basis points. Everybody in the grammar was predicting this on Twitter. 0 for next week. Okay. Yeah, make sure you have a stop loss though, right? I bought 65. Okay. Yeah. So 20 minutes left before he comes on. Anyways, question: do you see Doge going to the going in the next year or two? Gary answered your question. Let me look at Dogecoin. Slow and steady on this one. Slow and steady. Doge. What's your position in Doge, Didi? Let me know. What is your position in Doge? Dogecoin. So you can see that 20 to 22 resistance up there, can't you? This is the daily, by the way. So this if you look to the left hand side, that's March of this year when we ran, right? That's 22 cents ish. That's the same level we failed at this last run. So if we can break above 22 cents, then I think you're opening up room all the way to 30 pennies. Especially if Bitcoin is cooking too, right? Because kind of need Bitcoin to be cooking. Yeah. Yeah. Let me know what your position in Doge is, Didi. Because sometimes people ask questions like, "Hey, what do you see this doing in a year or two?" Because they want to buy it at the current price, and then have it be at $1 in a year or two. That's only fine when you're talking about, again, earlier when Josh was on, we were talking about long term stuff, right? That's the only case that's okay, right? Just dollar cost averaging into the S&P or Bitcoin at whatever price that it's at, knowing that it's going to be high in 2 years, that's fine. Anything else though, you want to be very careful. There are just times that you shouldn't be buying. So you're in at 14 cents, okay, you're fine then. You are a-okay. You're green on that position. So yeah, again, just keep in mind that you have resistance at 22 cents. And then in terms of like support, that daily isn't going to give me a level that's important to you. So I'm going to look at the 4 hour time frame there maybe. Um, where it goes all the way down to, yeah. So I would say watch 18 for your next level and then 15 cents after that. So support, and then resistance 22. I'd be surprised. Don't pull back to lows of the day before 4 p.m. For what? For the S&P? Interesting. Why do you think we pulled back to the lows of the day, Nazim? For SPY? So that would be 493. I mean, it's not that far off. Uh 33 months. No better place than this community. I love every one of you. Dan, like I don't know. I don't know. Sometimes you look at some of the videos, Dan, and you're like, damn, really? It's been this many years? Like where has the time gone? Love you, Dan. Thank you very much for the support and keep cooking, please. Alrighty? Keep cooking. Let's go, let's go, let's go to 33 more months, Dan. 33 more months. Not red for the day, Troy. Yeah. Yes, yes, yes. To look at his crystal stock balls. Yeah. So 593, Nazim. Why do you think we do that though? Sheesh. Can you believe the at the beginning of the year the S&P was at 433? 433. Overbought. Nazim. Okay, yeah. Let's see. I just think the S&P has been overbought for so long. Depending on the time frame, like the S&P has been up there. Like if I switch, let me switch time frames. Okay, so let's switch time frames here. The S&P has been overbought on the daily time frame for a damn long time. I mean, there are times where like we have these nice dips and then it resets, but still though, like these RSI figures, especially if you zoom out, yeah. But yeah, no, we'll see what happens here when he starts yapping. Are you holding a position, Azim, that you need to drop? 33 months, Dan. Crazy. Divergence. Okay, sounds good. Yeah, no, it is an important indicator. So some people love the divergence, and it works well. So la, 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 la. A ball is gonna say suck it. Oh wow. Thanks. SD bands, yeah. Like there's so many amazing indicators that whatever works for you, whatever helps makes money. That's the goal. Yeah, staircasing, yeah. Very, very nice. You're looking for an ODT lotto play? Okay, sounds good. Okay, we're back to 595. Shamir, which calls are you holding, by the way? Ayo, Marianne, how are you? Hi, Marianne. It's been a long time since you said hello. This is unacceptable. This is all Tej's fault, isn't it? Yeah, give him a slap. Doo. Yeah. Doo. Dan, when did you find the stream? Let's go on a walk tonight. I'm not going on any walks. The last time I went for a walk, I was. Anyways, hello, Peter. Dan, when did you find it? I know 33 months ago, but like, what were we streaming at that time? Was it stonks? Was it crypto? Was it doo. Pizza in the chat. Pizza is ready for Powell to come in and yap. Waiting for Powell to come in and yap. Okay. While we're waiting, let me update this. BTC. Copy. I know, Dan. I know. I just thought I would ask because some people you can tell. Like for pizza, you can tell it was like AMC GME. Uh, so far, la 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 la. Did someone tag me in that, or that's just Amazons? Amazons. What else are we looking at here? And his driver's license photo. Wow, can't believe you. Uh, on your trading view with Confluence on another indicator, Gary. Yeah. Some of the futures people use that in the driver's seat. We need Powell to come on. You guys need somebody else to roast. Ooh, spies like Ayo, red candle, AMC GME. Yeah, what's interesting though? The last time Trump was in power, we had some pretty crazy runs. Some very nice squeezing stocks. I wonder. You know, I wonder if this year maybe. Well, I mean, we will get some nice runs. Just trying to see if there's anything that connects, to back in the day. Will AMC run again, guys? Maybe this is the time that GME runs. Maybe. Damn it! Don't say stuff like that, Peter, because Dan is gonna start asking me for a video that I haven't found yet. Uh, Let me see if I can go find that video though. But before we go, let me let's listen to a quick promotion from our sponsor today, guys.
Scientists in Trinidad and Tobago believe they can build a rocket to go to the sun. Scientists in the United States said it is impossible that a rocket cannot go to the sun, it will be melted. The scientists of Trinidad and Tobago said they are not going in the day, they are going in the night.
Let's go. That's what Trump said before he won the election. He's like, we go in the night. I'm kidding. Anyways, so yeah, the markets are kind of selling off for now. Uh, that's not the video. That's not it. We go in the night. I'm looking for a video here. Hello, I am under the water. I am under the water. Do 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 do. Oh, you know what video I just saw? Peter and Josh, the racing video, my best lap. So I just saw. Do 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 do. To flat for the day. Yeah. Shout out to Marianne. Can you do me a favor, please? Can you do me a favor? Can you uh can you go upgrade Tej's membership because he's a slacker? Can you do it for him? Upgrade his membership. So Marianne, don't let him hear this. Don't let him see this. Just do it. Okay. Just uh just click on this link at the bottom of the chat. Okay. Click on that link at the bottom of the chat, and select the higher level. You weren't even driving. The instruction was drive. Yeah. Right. Right. You're right. You guys remember this? You guys remember this video? This is a video of a dude that was teaching a class, right? He's teaching a class, and he's in a position, and he's telling the class to go short. He's like, everybody go short. Everybody go short. The news is coming. The news is coming. And then as soon as the news comes out, he's like, boom, pointing to the downside, and the thing rockets up. You remember that?
हमने राउंड का ट्रेड प्लेस कर लिया
He's like, get ready, everybody.
4 3 2
Two,
1
one,
boom
boom. Oh my goodness. Oh, he couldn't look up. I know, Peter, I know. Oh my goodness. Whew. Look at this. Look at everybody. Why are they all bare feet? Is my question. Why are they bare feet? Unbelievable. Oh, seriously, Adam. Oh, that's so funny. Oh my goodness. You could hear the liquidation signs. Powell is on in 6 minutes. It's the confidence for me. It's like 3, 2, 1, boom. Welcome, Dan. It is funny. I don't know why I wasn't looking, but yeah. It was Peter. Right? Right, Josh? Oh my goodness. So yeah, Powell comes on in 5 minutes, and then I'm gonna switch over to the other screen there so we can listen to him yap. There's a lot of momentum or hype on DBGI as a penny stock. Let me take a look. So DBGI, lots of people love this one. Love this stock, even though it's not really doing much for now, but there's a lot of hype on this one. So stuff like this is good to watch after hours. The S&P really hasn't made a decision yet, right? Just going sideways. Let's go, Varian. I posted a picture for you in Discord. Let me go look. Let's go. Let's go. Look at that picture. Oh, how come I never had this picture? Josh. Thank you. Thank you. Thank you. Okay, I'm gonna save that picture. Save. Save. Let's go, Josh. That car was nice. When are we going back to Vegas? When? This summer, right? Next summer? I like it. Show us. Show us. Yeah. Too bad Powell is coming on in 4 minutes because I have the video. I could always play the video too, but he's on soon, and I still need to find the video. Tesh, of course you're invited. Or is that Marianne? Is that Marianne? Thank you for the super chat. Thank you for the super chat. See, Marianne. Marianne is the first one-on-one was caught live. No, actually, my first one-on-one was with. You know what's funny, Peter? I think my first one-on-one was with Noir. uh, I think so. I think my first one-on-one was with Noir, and Noir was asking me about these Canadian companies. Yeah, it was Bitcoin. It was all crypto names. It was HUDs, Josh. Tesh, unbelievable. Yeah, to go in early spring, colder, peak. Okay, let's go. Let's go. Yeah, I'm ready. Oh, pizza. Okay, so 2 minutes, guys. Let me pull up the Fed Reserve website. I don't know if you can hear that, but it's just music. So I'm just gonna mute it for now, and then we can go over there in like 30 seconds and be ready. Tesh and Marianne. Yup. Come on, Powell. So much headroom. You know what, Focus? You know what? There was no headroom. That was a fun day though. That was a lot of fun. That was a lot of fun. Show us the photo. I can't because Powell is coming on now. Yeah, let me switch. Oh, I hate when it does that. Okay, one sec. I just have it muted for now because he's not on yet. But the drift video? No, thank you. Let's go, Dan. Yeah, I want to see the markets kind of cook when he's on because I think he's gonna sound nice, like Gary mentioned. Come on, Powell, enter the room already. Here he comes. The people are waiting still. Trump is giving him the final. Let's go. Come on, late as usual. Oh, here he comes. One word and market reacts.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has eased substantially from a peak of 7% to 2.1% as of September. We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 0.25 percentage point. We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and remains low at 4.1% in October. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elevated. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Thank you. Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Sure. So let me say that in the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Nick.
Chair Powell, Nick Timros from the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
So I would just say this: we've watched the run up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long run rates are well below that level. So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about higher inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent and if they're material. Then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things don't really have mainly to do with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now? You get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. Let's talk about the data we've gotten since the last meeting. So in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger. Certainly the September employment report was stronger. The October report, not stronger. Retail sales stronger. So overall, though, I think you take away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions in particular. And so overall feeling good about economic activity. So I think we would factor that in. At the same time, we got one inflation report, which it wasn't terrible, but it was a little higher than expected. So I think really the question is December, and by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and we'll make a decision as we get to December.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell. when it comes to December, what will you be looking at specifically as you try to make that decision? And then as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
You know, we don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I will just say for December, we're going to be, again, at every meeting, we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points. And we're asking ourselves, is that where we need to be? You know that we're trying to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving too slowly and allowing the labor market to weaken too much. We're trying to be on a middle path where we can maintain the strength in the labor market while also enabling further progress on inflation. We think that's where we are, but that's the question we're going to be asking in September and in other meetings. And again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting.
Yeah, totally appreciate that. I guess when it comes to your own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, we're going to wait and see how things come in December. I mean, it's just, I would put it this way. We're on a path to a more neutral stance. And that's very much what we're on. That has not changed at all since September. You know, we're just going to have to see where the data lead us. We have, you know, a whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling it out or in, but you know, I would say to look at to make that decision in December. Obviously, I'm not ruling it out or in, but you know, I would say, you know, I would say that. You know, again, we didn't update the SEP, so I'm not going to characterize, you know, where the committee would be.
Howard.
Thanks, Howard Schneider with Reuters. I wondered if you could please elaborate, explain a little bit the 2 changes in the language of the statement here. In the first paragraph, when you say inflation has made progress, dropping the word further progress. And in the second paragraph, dropping the sentence that the committee had gained greater confidence that inflation was progressing towards its 2% goal. Is there any policy substance behind either of those changes in language? Is it meant to open the door to a December pause? Is it meant to communicate anything about the stickiness of core inflation in the last 3 months?
Not really, no. So let me tell you what we were thinking. So the test of gaining further confidence was our test for the first rate cut, right? And so we met that test in September, and therefore we take that test out. If you leave it in, then it's new forward guidance. It's brand new forward guidance. What do you mean by it? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path down to 2%. So that I would tell you is what that's really all about. It's not meant to send a signal. Neither of those is meant to send a further signal. And you know, saying further progress, it becomes a test. We don't want to be. We don't think it's a good time to be doing a lot of forward guidance. You know, there's a fair amount of uncertainty in what I've said. The path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So the point is to find the right pace and the right destination as we go. And I think there's a fair amount of uncertainty about that. And you don't want to tie yourself up with guidance. You want to be able to make sensible decisions as you go.
Steve Leisman, CNBC. Mr. Chairman, you talked about higher rates, perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher deficits. Is that something you think might be behind the recent rise in interest rates? And are rising deficits a concern to you?
So we don't comment on fiscal policy. And again, I don't have a lot more to say on what's driving bond yields. In terms of policy changes, though, Let me give you a sense of how this works in the ordinary case. Let's say Congress is considering a rewrite of the tax laws. Doesn't matter what's in the content. So we would follow that. At a certain point, we'd think we see the outline, so we'd start to model it. And then we'd wait, and then at a certain point, the staff would brief the FOMC and say, you know, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we try to get smart on that, and then the law actually passes. And you know, you'd start to put it. You probably run an alternative simulation before that happens, just to keep people trying to understand it. Then when it actually passes, it goes into the model, along with a million other things. So, you know, we have a very large economy. Many things are affecting it at any given time. And, you know, a law change of some kind would go in there, but it would, you know, it's a process that takes some time. Clearly, the legislative process takes a lot of time. And of course, the real question is not the effect of that law. It's all of the policy changes that are happening. What's the net effect? And, you know, the overall effect on the economy at any given time. So I think that's a process that takes a lot of time and that we go through all the time with every administration constantly. And this will be no different. But, you know, right now there's nothing to model right now. It's such an early stage. We don't know what the policies are. And once we know what they are, we won't have a sense of, you know, when they'll be implemented or all those sorts of things. So I think I would just say we're not doing that now, and all that will take time, and it will be very much regular order when we do that.
If I could just follow up on Nick's question, are the current rates something you feel like you need to lean against, in that they go against the direction of policy by adding restriction to the economy, or do you just take them as a given and perhaps a signal that you should do less?
I just think the first question is, how long will they be sustained? If you remember the 5% 10-year, people were drawing massively important conclusions, only to find, you know, 3 weeks later the 10-year was 50 basis points lower. So, you know, it's material changes in financial conditions that last, that are persistent, that really matter. And we don't know that about these. What we've seen so far, you know, we're watching it, we're reading, you know, we're doing the decompositions and reading others, but right now it's not a major factor in how we're thinking about things.
Chris.
Thank you, Chris Rugaber at Associated Press. You mentioned the positive economic data that we've seen since the September meeting, including the revisions to things like savings, higher GDP growth. We saw stock market jump yesterday. That's renewed some of the questions about why do many cuts at all in this with this backdrop.
So you're right. As I mentioned, and as you mentioned, the latest economic data have been strong, and that's, of course, a great thing and highly welcome. But, of course, our mandate is maximum employment and price stability. And we think that even with today's cut, policy is still restrictive. We understand it's not possible to say precisely how restrictive, but we feel that it is still restrictive. And if you look at our goal variables, the labor market has cooled a great deal from its overheated state of 2 years ago and is now essentially in balance. It is continuing to cool, albeit at a modest rate. And we don't need further cooling, we don't think, to achieve our inflation mandate. So that's the labor market. Inflation has moved down a great deal from its highs of 2 years ago. And we judged, as I mentioned, that it's on a sustainable path back to 2%. So the job's not done on inflation. But if you look at those two things, we judged in September that it was appropriate to begin to recalibrate our policy stance to reflect this progress. And today's decision is really another step in that process. Overall, as I mentioned, we believe that with an appropriate recalibration of our policy stance, we can maintain strength in the labor market, even as our policy stance enables further progress toward our inflation goal.
Great. And just to follow up, what might cause you to pause rate cuts in December? What kind of economic data would lead you to that path? Thank you.
So we haven't, made any decision like that at all. But we're in the process, as I mentioned, of moving policy down, our stance down over time to more neutral level. And as a general matter, as we move ahead, we are prepared to adjust our assessments of the appropriate pace and destination as the outlook evolves. So, for example, if we were to see the labor market deteriorating, we'd be prepared to move more quickly. Alternatively,
as we approach levels that are plausibly neutral or close to neutral, it may turn out to be appropriate to slow the pace at which we're dialing back restriction. Again, haven't made any decisions about that, but that's certainly a possibility. If you can think of it as similar to what we do with asset purchase, with asset runoff, with QT. So we reach a point where we slow the pace, much like an airplane reaching the airport slows down. And so we're thinking about it that way, but it's something that we're just beginning to think about.
Edward.
Thanks, Chair Powell. So with the noise in the jobs reports that we've seen, and you look at the Fed's favorite inflation, PCE inflation, overall it's 2.1%, very close to the Fed's target, but core inflation is 2.7%, and it's been that way since July. So why doesn't this data give fuel to a rate pause for this meeting?
Well, so I think if you look at the 3 and 6 month, you're quoting the 12 month. So we look at all of them, right? But if you look at 3 and 6 month core PCE, you'll see they're around 2.3%. So we look at all of them, and we look at 12 as well. But what it's telling us is that we really have made significant progress, and we expect there to be bumps. For example, the last 3 months of last year, the core PCE readings were very, very low, probably unsustainably low. So that's why forecasts generally see a couple of upticks toward the end of the year. On the other hand, the January reading certainly looks like an example of residual seasonality, so that we saw last year. So when that falls out of the 12-month calculation in February, we should see a thing down. So it'll literally be a bump up and then down. We understand that. Overall, you see the progress on inflation, and you also look at the economy and you say, what is the inflation story now? Where's it coming from? So I point to a couple of things. One is the non-housing services and goods, which together make up 80% of the core PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happens to be in the early 2000s for a period of 5, 6, 7 years. So they're back to that level. What's not is housing services. So let's talk about housing services. Housing services is higher. What's going on there is, market rents, newly signed leases are experiencing very low inflation. And what's happening is older, leases that are turning over are taking several years to catch up to where market leases are, market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So that's one thing. The other thing is, I'd say look at the labor market, not a source of inflationary pressures. Where's it coming from? It's not a very tight economy. What is the story about inflation? You see that catch-up inflation also in insurance and several other areas. So you're seeing. We're not declaring victory, obviously, but we feel like the story is very consistent with inflation continuing to come down on a bumpy path over the next couple of years and settling around 2%. That story is intact, and it won't be 1 or 2 really good data months or bad data months aren't going to really change the pattern at this point now that we're this far into the process.
So you're quickly trying to get to that neutral rate that you see, or do you foresee that you have some time to get there?
Nothing in the economic data suggests that the committee has any need to be in a hurry to get there. We are seeing strong economic activity. We are seeing ongoing strength in the labor market. We're watching that carefully, but we do see maintaining strength there. And so we think that the right way to find neutral, if you will, is carefully, patiently. Again, that's not meant to have a specific meaning, other than to the extent the economy remains strong, we have the ability to take advantage of that as we try to navigate that middle path between the two risks.
Craig.
Hi, Chair Powell. Craig Torres from Bloomberg. 2 questions today. Did you learn anything about what Americans think about the economy from the election results? First question. Second question. I want to talk about some labor market indicators, and I do so with great respect for your attentiveness to the maximum employment side of the mandate, Chair Powell. So the unemployment rate has been at 4% or higher for 6 months. One of the broadest measures of unemployment is up about a half a point from a year ago. Compensation gains are sliding back. The quits rate, a signal of labor market dynamism, has been heading down to that bad neighborhood of the 20 teens. So you have put a marker at Jackson Hole saying any further cooling is unwelcome. It is cooling generally a little bit further. So at what point do we reach what you would describe as a shortfall from maximum employment? Thank you.
Sure. So on your first question, I'm not going to talk about anything that relates directly or indirectly to the election. On the second one, this is the great question, and it's the one we think about all the time. So I'll just say a couple things. There's nothing really surprising here. What we know is that the unemployment rate is low. We also know that it's moved up significantly from a year or so ago. So we've seen a big change upward in unemployment. Sometimes that has meant bad things. So far, it doesn't appear to be. It appears that I wouldn't say that the labor market has fully stabilized, because I do think it's continuing to very gradually cool, but it seems to be in a good place. And our policy, of course, is designed to keep it in that good place, to maintain the strength in the labor market while also enabling further progress on inflation. You mentioned a bunch of indicators, and you're right. The openings to unemployment rate is back to a normal level. I would characterize it more broadly as normalizing. You mentioned wages. Wages are still running just a bit above where they would need to be consistent with 2% inflation, unless productivity is going to remain at this high level. If we see productivity, more sustainably at these high levels, then that would sustain higher wage gains. So I would say, in fact, you can say it the other way, that wage increases are now consistent with 2% inflation given current productivity readings. But of course, the lore on productivity readings is whenever you see high readings, you should assume they're going to revert pretty quickly to the longer term trend. That has always been the case for 50 years. But it may be that we're now 5 years. If you look at the NIPA revisions that came out a month ago, we're 5 years into a nice set of productivity readings, which are sustained and very healthy. But overall, it's a good labor market. We could talk about 20 different data series. We'll be looking at all of them, of course. We don't want the labor market to soften much from here. We don't think we need that to happen to get inflation back to 2%.
Victoria.
Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Mike?
Michael McKee from Bloomberg Radio and Television. You talk a lot about what the data are telling you and how you are dependent on the data. But in terms of forward-looking assessments of the economy, what are you hearing from CEOs or other officials around the country? What did you hear today from the regional bank presidents about what companies and consumers think about where the economy is going from here rather than looking backwards? And does that match up with what your forecasts have been and what you think the appropriate policy path should be?
So it's hard to characterize a really interesting set of discussions we had, and of course you'll see them in the minutes in 3 weeks. But I would say this: I think the comments from our Reserve Bank colleagues and from the CEOs that they talk to are pretty constructive on the economy right now. Pretty constructive, feeling that the labor market is back to normal, to the point where it's no longer that much a discussion topic in their worlds, whereas 2 years ago it was all they were talking about. So they feel like the labor market's in balance. People feel good about where the economy is. Demand is obviously pretty strong, and you're seeing 2.8% growth in the third quarter estimated. Maybe the year's 2.5%. This is a strong economy. It's actually remarkable
how well the U.S. economy has been performing with, strong growth, a strong labor market, inflation coming down. We're, really performing better than any of our global peers. And I think that is reflected in what you hear from, what I hear people hear from CEOs. I don't get to talk to a lot of CEOs in my job, but I hear what others summarize from those. And of course, I hear the Reserve Bank presidents do a lot of that. And it's pretty constructive overall. Now, that's not to say there are areas of caution and things like that, but ultimately, overall, pretty positive.
Well, to follow up the areas of caution, if there were black clouds on the horizon that you identified as something you're watching, what would they be?
I think it's things like clearly geopolitical risks around the world are elevated, and just as clearly they've had relatively little effect on the U.S. economy. Now, that can change through the price of oil or otherwise, but people talk about those as something that's on the horizon all the time. But ultimately, if you look at the U.S. economy, its performance has been very good, and that's what we hear from business people, and expectation that will continue. If anything, people feel next year. I've heard this from several people that next year could even be stronger than this year.
Andrew.
Hi, it's Andrew Ackerman with the Washington Post. I just wanted to follow up on the discussion earlier on fiscal policy. Your predecessors, Greenspan and Volcker, spoke up loudly when they thought large budget deficits endangered economic or financial stability. Will you do that too? And right now we're in a period of full employment. We have large budget deficits and debt at historic highs that are rising. Is that something you'd speak out against?
So, I have said many times, no more, no less than what the predecessors you mentioned have said. And what that is that the U.S. federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not unsustainable. The path is unsustainable. And we see that you've got a very large deficit you're at full employment, and that's expected to continue. So it's important that we, that to be dealt with. It is ultimately a threat to the economy. Now, I can say that I don't have oversight. We don't have oversight over fiscal policy. I've said it on many occasions, just said it again.
Okay, thank you. I guess the other question is to follow up on Victoria's question. Do you believe the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
Courtney. Courtney Brown from Axios. In response to Howard's question, you said it wasn't an ideal time to give forward guidance because of the economic uncertainties. Can you lay out what some of those uncertainties are and whether or not it includes some of the proposals that the president-elect has put out on the campaign trail, tariffs, for instance?
No, I was not referring to the new administration's policies at all, nor will I today. So what I'm just saying is, as we look ahead, we know, and I mentioned this in my statement, that the risks are two-sided. I guess I should start by saying that we think that the economy and we think our policy are both in a very good place, And but as you look forward, you say, what are the risks? And one risk is that we would move too quickly and find ourselves having moved too quickly, and inflation comes back, and we lost our chance to get inflation back to 2%. So we have to avoid that risk, and to avoid that risk, that means you want to move carefully. The other risk is that we move too slowly, and that we allow the labor market to weaken too much and do unnecessary damage to the labor market and to people's working lives. That says don't get behind the curve. So these two things are the two risks that we have to manage, and so we're in the middle there. We try to be in the middle and deal with manage both of those. Again, the idea is to support the strength we have in the labor market and in the economy, but also with somewhat less restrictive but still restrictive policy, enable further progress toward our 2% inflation goal. So there's
this is a thing we're meeting by meeting, we're going to be making our assessment of what the right path is. It's not as important. The precise timing of these things is not as important as the overall arc of them. And the arc of them is to move from where we are now to a sense of neutral, a more neutral policy. We don't know exactly where that is. We only know it by its works. We're pretty sure it's below where we are now. But as we move further, there will be more uncertainty about where that is. And we're going to move carefully as this goes on so that we can increase the chances that we will get it right.
Simon.
Thank you, Chair Powell. Simon Erminovich with The Economist. I know you don't want to share your decomposition of bond yields, but if you look at the break-evens, it is clear that longer-term inflation expectations do seem to have risen up at about 2.5%, for example, on the 5-year. That's up half a point from when you cut in September. Do you have any concern at all that longer-term inflation expectations are de-anchoring, or put another way, are anchoring at a slightly higher level? Thanks.
So we would be concerned if we thought we saw longer-term inflation expectations anchoring at a higher level. That's not what we're seeing. We're still seeing, between surveys and market readings, broadly consistent with. I looked at the 5-year earlier today, and it's probably moved, but it's just not. It's kind of right where it's been, and also it's pretty close to consistent with 2% PCE inflation. So that's one that's been a traditional one that we look at a lot. But overall, expectations seem to be, and really have throughout this, in a place that's consistent with 2% inflation. But you're right to say we watch that very carefully, and we will not allow inflation expectations to drift upward. But that's really why we reacted so sharply back in 2022 was to avoid that.
Kelly.
Hi, Chair Powell. Kelly O'Grady, CBS News. We just talked about what you've heard from business leaders on the economy, but many average Americans are still not feeling the strength of the economy in their wallets. So what's your message to them on when they might expect relief?
So you're right that we say the economy is performing well, and it is, but we also know that people are still feeling the effects of high prices, for example. And the world went through a global inflation shock, and inflation went up everywhere, and it stays with you because the price level doesn't come back down. So what that takes is it takes some years of real wage gains for people to feel better. And that's what we're trying to create. And I think we're well on the road to creating that. Inflation has come way down. The economy is still strong here. Wages are moving up, but at a sustainable level. So it's just, I think what needs to happen is happening, and for the most part has happened. But it'll be some time before people, regain their confidence and feel that. And we don't tell people how to feel about the economy. We completely respect what they're feeling. Those feelings are true. They're accurate. We don't question them. We respect them.
And just a quick follow-up, President-elect Trump has been critical of your performance. Any concern about his influence on the Fed's independence?
I'm not going to get into any of the political things here today, but thank you.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. What is your plan if we start to see stagflation?
So that's the whole plan is not to have stagflation, so we don't have to deal with it. So that is actually our plan. It's of course a very difficult thing because anything you do with interest rates will hurt one side or the other, either the inflation mandate or the employment mandate. I would just say that we've been able to see inflation come down a whole lot, much closer to our goal, without the kind of sharp increase in unemployment that has often accompanied programs of disinflation. So, knock on wood, we've gotten this far without seeing a real weakening in the labor market, and we believe we can complete the inflation task while also keeping the labor market strong, and that, of course, is exactly what we're trying to do.
Can you rule out an interest rate hike next year?
No, I wouldn't rule anything out or in that far away, but
That's certainly not our plan. I mean, our baseline expectation is that we'll continue to move gradually down towards neutral, that the economy will continue to grow at a healthy clip, and that the labor market will remain strong. If you look at our that will not change from the September SEP. You know, that is our baseline forecast, and short of some exogenous event, that will continue to be our forecast for the foreseeable future. So, but ultimately, you know, we're not in a world where we can afford to rule things out a full year in advance. There's just too much uncertainty in what we do.
Let's go to Jean for the last question.
Hi, Chair Powell. Jean Young with MNI Market News. I wanted to go back to a comment that you had made about Americans being quite unhappy about the cumulative price level rises over the past few years, even though now inflation is back on a path to 2%. Would it be appropriate for the Fed to undershoot for a while on its inflation goal under the average inflation targeting regime, so people have a chance to catch up?
No, that's not the way our framework works. We're aiming for inflation at 2%. We did not think it would be appropriate to deliberately undershoot. And you know, part of the problem there is that low inflation can be a problem too, in a way. But that's not part of our framework, and it's not something we're going to be looking at in our framework review. Thank you very much.
Thank you very much. Thank you very much. Bye, Powell. Bye. He's like, yeah, I'm not leaving, guys. Like, I'm not leaving. I mean, really, there was nothing on there that was, you know, new and surprising for the market. So we continue going up, I guess. We continue going up. But if we were going to sell off, though, now would be the time. And then tomorrow, Friday, right? So let's see how we end the day. There's 45 minutes left. And we're sitting at 496. We're $4 away from 600, guys. $4. Can you believe that? $4 from 600 for the S&P? Sheesh. Like, look. Look. 26% year to date. 93% over the last 5 years for the S&P. Sheesh. I mean, it's not a momentum stock, but that's pretty impressive. That is very, very impressive. Very, very impressive. Look at that. We just hit new all-time highs for the S&P again. He said, we have no real concern for where we are at. We're on a positive trajectory. We are on the way to 600. Josh, only up, no downs. Bitcoin is also looking for new highs. Also looking for new highs. Come on, BTC, stop slacking. SPY is already at new all-time highs. You do the same. Do the same, please. Miracles. Well done, Joe. Well done. I'll take a look at BNZ. I will look. There you go. 96.40. Yeah, GV's slowly curling there, isn't it? So yeah, it's getting a lot of attention into the close, which is nice. GV. So I'm sure this is something we're going to be talking about going into the end of the day and then potentially after hours, if nothing else shows up. Okay. Some good volume. There's also all-time highs. Not quite. Oh. No, not quite yet. Very close, Bunny. Very close. Oh, there it is. It just did it. It was 824, and this last candle just took it to 835. So yup, BTC is like my turn, and the S&P is going still. So we're gonna be at 700 by end of the day. If we just do the exact same thing we did today, tomorrow, all-time highs. La 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 la. Yup. Cooking. Josh, yeah. And then we can let's see. Where is Josh? Okay. Do. Let's go. How much time do we have? Okay, 45 minutes. Perfect. 45 minutes. GV. Yeah, this thing needs a bit more volume. You get more than double the unusual volume, but it's there. Yes, please. Dan, yes, please. I like juice boxes. What did you say? 700? No, I said 600. 6. Josh heard me, guys. I said 6. Hey, Josh. Hello.
How's it going, buddy?
Good.
Yeah, I had to get that all worked out. I had like 3 different YouTubes open, and they all decided to come on to Hot Trades at the same time.
Yes. You is this still snowing?
Yep.
Oh wow, it's crazy.
It's supposed to snow until Saturday.
Oh wow.
Boy, it was. I'll tell you what. You want to talk about a show to start the morning this morning? Good Lord. So the guy, I figured they would have called me because the highway that comes out to my house was closed.
Okay.
And no, he made his way out here.
Oh wow.
And got onto the driveway, and he got through the gate just fine.
Yeah.
I have an angle on the driveway for drainage, obviously, and it just pushed him right off into the field. And,
oh wow.
Yeah, that was fun. So he got to dig out his van to start the day, and
why would you drive all that way without calling though? It's like
No. Furthermore, so when you come off of the highways apparently were fine.
Oh,
The
okay.
problem is when you turn off of the highway onto my road, my road is dirt.
Oh, okay.
So, and we've had 14 inches of snow, and he's driving this tiny little. It's not even as big as a Sprinter van, you know. So it's like the what was it? The Geo Metro, a freaking or Smart Car, a freaking work vans.
Yeah.
Oh, it was not good, man, not good. And I told him, we're gonna maybe just have to do this differently the next time you guys come out here.
Yeah.
In the snow, it's bad.
Yes.
No, I'm in Iceland, Raven. That'd be sweet though. Iceland's beautiful, man. Absolutely gorgeous. And the people there, I've heard, are wonderful.
Yeah.
So
Iceland.
I'd love to see that place, but no, I live in Colorado.
BTC. Oof.
How you like me now, Blaze? You like this?
I just want more dips, Josh. I want, just wait for me when. Okay, good.
We'll get them. And in fact, so we've been discussing lately, the blitz towards 100K, because I think that's kind of what everybody's trying to digest now.
Yeah.
And realistically, I could foresee as much as a 20% sell off from 100K, and potentially revisiting this breakout at 77K.
Yeah.
Don't quote me on that, man. Play your assets as you see fit.
Exactly.
And I will say, I have a mantra: thou shalt not sell thine biddies. Okay. So you keep that Bitcoin, close to your chest, and you never get rid of that stuff. And if you want to, do profitable trading stuff in the crypto market, either have enough to trade a portion of Bitcoin around your core position, or just trade altcoins for profits and utilize those profits for some sort of allocation to Bitcoin as well. You want to be stacking Bitcoin. You don't want to be selling it.
Yep.
It's too hard to get in at the bottom, man. With the ETFs in here, We've got, pension funds are starting to pick this stuff up. The scarcity of Bitcoin is going to start to reflect onto the market in a very, very major way.
Mhm.
And as I was saying this morning, if the United States moves forward with creating a strategic Bitcoin reserve, it will automatically skyrocket to unbelievable numbers. And you don't want to be caught on the backside of that, because now you're buying Satoshis. You're not buying Bitcoin anymore.
Yeah. Yeah.
I mean, you're still buying Bitcoin, obviously, but you're buying such a difference in the size of your position, a year from now, even, versus being able to buy it right now. And shoot, man, just like Michael Saylor, I'll say it over and over and over again. I'll continue to buy the top of the market forever. Doesn't bother me.
Yep.
Doesn't bother me. And the dips are just more opportunity for me to get more cheaper.
I was talking to someone last week. What's the S&P's assets under management? I can't remember now.
Total?
Yeah, it was a few trillion.
Oh man, I want to say it's probably 6 or 7 trillion.
Okay, because I think Bitcoin is at what is it, 1.5? Yeah.
Yeah, we have a way to go.
Yeah. Yes.
I mean, ultimately, the big one's going to be Apple. Conquering Apple is that'll be huge. Well, actually, no, it's NVIDIA now, because I think NVIDIA is like 3.2 or 3.3 trillion.
Yeah, NVIDIA is at 3.6.
6 now.
Yeah. Yup, it's just cooking.
Dude. And I mean,
Yep.
It's one of those permanent holds, man. And I'm still a fan of AMD. I still believe in AMD.
AMD, okay.
Yeah. I still believe in it. It's not gonna be able to ever overtake NVIDIA now.
Yeah, no.
But because they, it's always that first mover's advantage. And NVIDIA crushed it. And now their AI is designing new AI product for them. So it's onward and outward with that thing. That's going to be another one to just throw into your portfolio. Buy what you can when you can as a DCA and hold it forever. Let's see.
Yeah. You know what? I'm surprised that hasn't happened yet, though. Some of these Bitcoin stocks like CLSK, they're running, but they're not really running as they did last time.
Okay, so we were way off.
The offering.
$49.763 trillion, please.
Yeah.
So 49 trillion. Yeah, we've got a ways to go.
Yeah.
50x market cap on Bitcoin would be, or a $50 trillion market cap rather would be remarkable, because that's what 38x from where almost 50x from where we are now, because we're 1.7 trillion.
Yes.
Oh, okay. So like 24x. I'll take that. 1.24 million per Bitcoin.
Yeah. When's iBit gonna start giving us dividends? When?
I've never. And ultimately, I wouldn't want them to give dividends, because that means that they have to play volatility with those positions, and they're supposed to be a store of value, right?
Yeah.
So that's I don't think that's going to happen. Maybe if the shareholders vote for it, if they put it up to vote and the shareholders vote for it, maybe. But that also means that they're going to start, liquefying or liquidating some of those positions, out of that portfolio, and that's dangerous too.
It is.
Dangerous.
Which is why I didn't want to get too much into BITO.
Mm-hmm.
Yeah.
The options help a lot. BITO has actually been excellent. I like the stable dividend. I can just rely on it, and that's been nice. CONY has been mind-blowing.
Yeah.
Absolutely mind-blowing. And I think that's only going to get better over time. MSTY is another one that's been just absolutely extraordinary. Many of the proxies, if you play the proxies the right way, you can really make an absolute killing on them. Jeff can tell you, if Jeff were here right now, I'm sure he's listening, but probably up on a ladder.
Ladder.
Yeah. But that's been another spectacular one. We've been rocking it, absolutely rocking it for the last couple of years with these longer term sector holds for sure.
Yep.
Dude, this camera makes my eyebrows look crazy, dude. That's amazing.
What do you mean? Is it just the stream, the way that it streams it?
Yeah.
Or?
See, watch.
Like,
when I put my hat on, watch. They grow like 5x.
Oh.
Look at that. I got some Groucho Marx brows now. I'm going vaudeville for you guys. That's pretty sexy. What do you think? Powell brows? That's not cool, Troy. They're not that bad, dude. Powell's brows go to like his earlobes.
Oh, it's the lighting.
It is the light. Yeah. Stupid high def man trying to make adjustments.
Yep. Yes. You can blame Dan for that.
Man, come on, Spy. Push over it. Just get these tiny little areas of consolidation. Just move the next leg. There's no reason not to. We're getting all of the right economic data, and moving into another Trump administration. If the economy goes even half as well as it did last time, it will be truly explosive for the market. It's going to be phenomenal for all of us. I love the rising tide lifting all boats.
Mm-hmm. One Pete.
Yeah, all right. There we go. That's better. I'm not sitting at the bottom of my camera like Blaze is.
Yeah. Well, anyways. I don't want to say anything because then I'm going to be roasted.
So what do you guys want to talk about? Anybody got questions? You guys working on anything?
Yeah. I still waiting for Joe to get into these long positions he promised me. This was like a year ago.
Joe makes too much money on futures. There's no reason for him to do anything different.
That's true.
I mean, you could be packing a whole bunch of that money away into Bitcoin, of course.
Exactly.
You don't want to hold a melting ice cube.
Joe is too busy making money. Futures.
And still doing a job, man. I mean, that's the American way right there, man.
Yeah.
Hardworking blue collar people. We'll do it on the side.
In time. I think Josh mentioned earlier, and we talked about this the other day, Mike, that the next time that thing probably runs is when he's going actually taking possession of the office,
Yeah.
And then you get a run then. But other than that, it's always buy the hype and sell the news, always, every time. So not a surprise that DJT sold off.
Yeah, no, it definitely doesn't surprise me.
Yeah.
There are some things to clean up, some messes to clean up before things really get traction.
Mm-hmm.
But in terms of a prediction, like I said this morning, the prediction's pretty simple. He's going to completely unleash our energy sector, completely unleash them. That's going to drive the price of gasoline down to historic levels, which would be absolutely wonderful. Because when the pendulum swings, you guys, it swings really hard, right? Mm-hmm. So we'll see how that goes. Lowering the cost of fuel across the board, regardless whether it's jet fuel, diesel fuel, gasoline, any of those things, it won't make but a gigantic dent in the pricing of all of our goods, and that's globally. When you consider the cost of goods, you also have to consider the fact that when a tanker or a shipping container is traveling over the ocean, they're burning thousands of gallons an hour. Mm-hmm. So there's a lot of fuel consumption that goes into the cost of goods, and eliminating a good portion of that is going to translate into market pricing. You should see that on the shelf. If you don't, This is where people start to complain about, corporations not being fair in the way that they're pricing their goods, and absorbing extraordinary profits. Now we know that many corporations don't care about that, but the louder the voice and the more complaining, it definitely works, man. The squeaky wheel gets grease. So that's going to be a big portion is consumer activism. That can have a really great effect on pricing. And since we're starting to reach some of our inflation targets, I think that the only natural progression with those three things kind of coming together and easing of the Fed with their balance sheets. I mean, it's sort of the trifecta, you guys, in American economics. We're a consumer society, so market pricing is absolutely crucial to our success. And Donald Trump is a professional at getting prices down. We watched it happen for 4 years. You guys, this isn't about politics, and no matter my feel about Donald Trump, what I do know is that for the 4 years that he was in office, our economic prosperity was nothing that I had ever seen in my lifetime. And certainly after recovering from the 2008 market crisis and watching how that affected millions of families, I'll just tell you, it was more than remarkable what he was capable of doing, what he was able to do, and especially considering the headwinds that he was facing. Without many of those headwinds, I think we are in for probably one of the most prosperous times in all of this nation's history, given that he doesn't have to face the same type of lawfare and backstabbing and BS in the MSM over the course of the next 4 years. If he's given a fair opportunity to govern as the president of the United States, I think that everyone in our country is going to profit in an extreme way. That's my prediction.
I like it. Yeah, that was a good question from Jay, actually, because and I do agree with you, Josh, because if you look at anything else that could potentially benefit from him, being in office, has had a really nice run already. The one sector that hasn't is energy, right?
That's right.
So
That's
when you start looking at names like Oxy, from $70 to $50, like these names they're sitting at yearly lows now. So.
And I do want to mention something else, because when we're talking about the energy sector, we can't forget about the importance of renewable energy. Donald Trump intends to bring Elon Musk into the administration in several different ways. He's one of the most brilliant men on the planet, and Donald Trump truly does value his advice. And now that they're kind of on an even plane, I think that it's going to open Donald Trump up to even more of Elon Musk's ideas for our future, for our energy infrastructure. So do not sleep on solar technologies, battery technologies, storage technologies, and do not sleep on Tesla. I'm just saying. The future is bright for renewable resources. And listen, we are an oil family. Okay. So, my wife is directly in the oil business, and I will tell you that nobody is a bigger proponent for utilizing the maximum efficiency of all of our fuel sources that we have available to us, and that includes nuclear. Don't sleep on nuclear. I think that that's going to be a very big deal too. And Elon Musk is made a lot of comments about that. And I would keep a close eye on who's chosen for the Department of or the Secretary of Energy, okay, and the Secretary of Infrastructure, or not infrastructure. What's the word I'm looking for? Joe, help me. Interior. That's the word I'm looking for. The Department of Interior. There we go. You guys like my hairdo? What do you think? I had to throw my hat down and get some fresh air onto my brain. Oh,
yeah.
The brows are back. I had to get some air into my brain there.
Yep.
So, E85 ethanol. I'm not a big fan of corn fuels. Not a fan at all.
Speaking of,
they're great for race cars. Don't get me wrong. They're great for race cars, but for the average internal combustion engine, they're a disaster.
Yeah. Like, why? Yeah, that 300 level for Tesla is a problem, which isn't a huge surprise.
I mean, come on, dude. Think about how historic that level is.
Yeah.
You know what I mean?
Yeah, that was the initial split drop level, wasn't it?
It was.
Yeah.
Yeah, I believe it was.
Yeah.
I mean, zoom out, Blaze. Zoom out.
Let's go daily.
I'm watching a day trade right now, so I can't
Okay.
I can't change my charts.
Okay, sounds good. Oh wow, look at that. Yeah. Right. This is the split back in 2022.
Yeah,
That was the run and 300. So that level is massive, between 300 and 310.
And I'll tell you right now, if it breaks that, 400 is target, buddy. Yeah, I mean, I think it's really hard if it breaks over 300 in a clean way.
Yeah. What's interesting is 420 with the split is the highest Tesla has ever been.
So yeah, and I'll tell you right now, Elon jokes to himself about all that stuff.
I know. Unbelievable.
He's not a big smoker, but the man loves to have a what is it? The Trulies. He loves those freaking Trulies, man. It's so fun. Drinks the weakest junk. It's so garbage.
Yeah. Ooh, Intel has done really well today.
Yeah, you're going to see technology, I think, over the course of the next 10 years. I think the technology sector, AI generally, is going to be the hottest ticket, period. Yeah. The hottest ticket. And all of the blue chips that embrace AI in a huge way, they're also going to benefit from it. Mm-hmm. Do you remember, what was it? What was that? Last year? No, the year before last, when we went through that AI blitz. Mm-hmm. And we had all of those AI companies, and over the course of that 1 month ran.
Yeah, BBI, AI, yeah.
That's crazy. And I think we're going to see exactly the same thing all over again. And then we're going to get these articles about random companies like, oh, we're implementing AI.
Exactly.
And for no good reason at all. They're just going to take off.
Yep. Every so often there's a theme like that.
Yep.
And then it's the trashiest company that companies that try and implement like the theme, the vibe.
Oh yeah, BBAI. Remember?
Yeah.
Yeah.
Yep.
Yeah. Amazing money to be made though.
Yeah. BBAI, Sound AI. There's so many names.
Tony, he's just a very middle of the road human being. People have a very incorrect view of the way that guy is. I don't think that it's fair that anybody in the general public ever makes any sort of an assessment about a human being just because they hear something about them in the media. Mm-hmm. You ought to do some digging first and formulate an opinion based on their actions, because actions speak louder than words, man. And there's nobody on this planet that's done more for humanity than Elon Musk. Period. He is the only human being in the world that is spending literally billions of dollars to sustain human existence throughout time. Like, he's the only person working on that. And it may very well be that at some point in our future, hopefully not a near future, hopefully really far off in the future, mm-hmm. It may be the very thing that saves humanity's existence. So, I have a lot of love for the man. A lot. Hi, baby. They're going out to play on the four-wheelers in the snow.
Oh, in the snow? Okay. Like, what's the temperature when it snows like that?
Right now it's about 36. It's not bad out. Fahrenheit.
That's not bad.
Yeah. I suppose definitely not Celsius.
No.
Yeah. We get heat snow here in Colorado. It's a weird place.
Yeah. Let's see. 20 minutes before the market closes.
Nikola Tesla. Oh, Troy, don't get me started on that guy. Do you know who picked up Nikola Tesla's papers after he was murdered? Donald Trump's uncle.
Oh.
You didn't know that?
No, I did not.
Yeah. His uncle was a very famous professor at MIT.
Oh, wow.
Yeah. No, it wasn't the CIA, Mike.
Interesting. Huh. The CIA.
Yeah, and he had them for he had them for hours. It was several hours. He had those papers before they came and picked them up.
Oh wow. Okay.
Yes, I'm absolutely certain, Mike. In fact, Donald Trump talked about it in one of his rallies just a couple of months ago. I'm absolutely positive. And I knew this before he even spoke about it in the rally. We knew this years ago. Yeah, you can Google it. I think it's probably pretty general knowledge at this point, you know.
Yeah.
I was about that deep, you know, above my head in the rabbit hole for many years. I see the world in a very different way than most people do. You know. This is ugly. Look at that. This is some T-Rex.
It really is. It really is. I want some of it though.
Yeah, yeah. I mean, I love this bounce, dude. Right at the bottom of that lower band, and it's just holding.
Let me look at the daily again here really quick.
What was that? 141, right?
Yeah. See, I wish you would. It failed right at resistance, which again to be expected, right below 170.
Yeah, I think that person he went into business with, Tony, was Rockefeller, John D. Rockefeller, if I remember correctly. Who, of course, you know, was a major shareholder in Standard Oil at the time, which is why they didn't want perpetual energy with the Tesla coil. That's why he never completed that project. It's a sad story what happened to Nikola. He was a true genius of his time. Absolutely.
Mm-hmm.
Man, this sucks. There's no fun stuff happening right now.
I know, right?
Even Spy's like, I'll just take a nap for that.
I know.
I do like Bitcoin testing this 76.5 level right now.
Yeah. Okay.
If it can hold right here, this is going to be intense.
Yeah. Yeah, the S&P is just sitting there. Pretty impressive run, though.
Oh, yeah. All of it's been impressive.
Yeah. Yep.
Rising tides, my friends. This is where things become fantastic.
Yep. I like it. Keep going. Just get above 600 and then consolidate. And then consolidate.
Oh, are you done for the day, Joe? Are you all out for the day?
Yeah, too much. He's been scalping too much.
Well, dude, did you see it? He got 25 ticks on one of those plays a couple of months ago?
Yeah.
Golly.
That's very impressive.
It takes guts to hold through that, too. You know, you see that one red candle pop up and you're like, oh.
It was a criminal.
It was totally
criminal. You want to, let's see. I want to look at that. What happens?
Oh, you're shorting, dude. Oh, you got some big ones, buddy.
Crypto bubbles.
You think we're gonna just retest the breakout, or you think it was a fake out? Oh, I love that. Look at that Dogecoin. Man. And to think, you know, when we started buying, that was at 2 cents, I want to say, between 2 and 4 cents.
Yeah. Right below.
MicroStrategy, bud.
Yeah.
Oh, that's no. Sorry, wrong one.
Yeah, they create like these other ones, which is, I don't know why they do that, but people do stuff like that
because people put a lot of money into them.
That's crazy.
That's why. And you know what's funny is, with all of the coins that are being created right now, I think the number's around 3,000 coins per day. With all the coins that are being created right now, and all of the runs that we've seen in meme coins, the stories about rug pulls, like,
it's crazy.
Number is tiny.
Mm-hmm.
Tiny number.
Yeah.
But be careful if you guys play memes or altcoins. Just be careful. Know what you own.
Yeah.
You know, meme
Yeah.
coins are exactly that. They're meme coins, man.
Yep.
There's nothing really behind them most of the time. SHIB proved to be a different kind of project, but it took a lot of gumption to hold on to that one too.
Yeah. Ray. Yeah, this is the actual Doge, 79%, which isn't bad.
Nope.
Not bad. ETH has been cooking lately with Bitcoin. No-
Yeah, ETH is an interesting story right now. Seeing Vitalik come back into the market, actually, have a presence on social media is kind of nice. I'm glad the man finally got a girlfriend, dude. I'm so happy. But at the same time, he is kind of the fundamental face of the second largest project in all of cryptocurrency.
Mhm.
It's pretty important that he maintains some sort of a public presence, because every time he goes away, we see what happens. It's just price attrition.
Yeah.
So, and we'll see if ETH comes up with any sort of, phenomenal advancements to increase speed, increase efficiency, and decrease cost.
Mhm.
But without bridging that particular asset, it's really hard to do. And that's why I am 100% long Solana.
Mhm.
Solana is eating ETH's lunch completely in terms of transaction volume, users every day, or daily active users. That's the term I was looking for. Overall revenues. I mean, it's just absolutely destroying Ethereum, destroying it. And considering how small it was just 2 years ago, especially with the FTX collapse, that was phenomenal, right? All the way down to $8. And with the way that they've come out of it, rising like a phoenix, to say the least, to become the #1 chain, it's phenomenal. It's phenomenal. And the activity on that chain, largely is due to meme activity. So if you want to trade some volatile stuff, man, you've got to get Jupiter. That's the one that I use and I recommend. Phantom is another really good one for Solana. But it's been wonderful, and anybody playing on the Solana chain has had an absolute riot the last couple of years.
Mhm. Yep. I will never forget driving in the car in Vegas and Josh was yapping about Solana.
At $21,
less than $21.
was it? It's possible.
So
Yeah.
something, yeah, in the teens or something. Yeah.
God. Oh, geez, if that's the case, and you didn't load up,
Yeah. And so that'd be one of my regrets.
Well, even like I've told everybody, Solana's got a 10x opportunity from where it is right now.
Yeah.
I mean, still has a 10x opportunity. So, and it's a relatively, in terms of large cap assets, has a pretty low, cost barrier to entry.
Mm-hmm.
I think it's a phenomenal buy, and going into the future, I think it's going to be amazing, absolutely mind blowing. What comes out on Solana. There are a lot of different projects that are migrating onto the Solana chain just for additional exposure, not even necessarily to strictly have their or exclusively have their project there. It's just for expansion and integration and interoperability, which is going to be crucial for any company to survive on the blockchain going into the future anyway. If you can't operate in several different languages on blockchain, you're history. You're absolutely history. And another one is Sui. I really, really like what Sui is doing. And I don't necessarily like the unlocks, because we're in very early. So there is some unlock activity that may, have some effect on the price. But going into the bulk of the market, or the bulk of the bull market, I think that's going to have a really parabolic kind of rise as well. And it does play well as a sympathy to Solana, even if you're just looking to play some momentum in and out. Cost of entry on that is, it's $2, $2.50.
Yep.
Yeah, look at that slap.
I think people are just, closing positions at the very end of the day.
Oh yeah. Well, and tomorrow's Friday.
Yeah, exactly.
So they want to make sure that there's some volatility to play into lunch tomorrow. So I think Joe probably played this perfectly. And the retest, is that your 20 down there?
Yeah. No, this is the 200 on the minute.
Oh, is it really? Wow.
Yeah.
Okay. Well, I mean, Joe, I'll tell you what, if it breaks below the 200, man, it's in the money. It's in the money. You know?
Yeah. Okay, 4 short. I thought I saw 45 contracts short.
Yeah, but he's 4 short with 20 ticks.
26, yeah. Criminal.
Dude, be careful, buddy. I mean, right now it's testing the breakout. So if it bounces off of this level, you may want to consider.
Yeah.
Just saying. No, sir. Okay, well, right on, man. Right on. Especially they're free contracts anyway. You already made your money for the day.
Yeah, exactly. Exactly. Yep.
You guys crushed WeBuy. Well done on that hot trades.
That was
that was killer.
Yep.
Absolutely killer. Where did it cap? 400%?
I think so.
Because it had just crossed over. When I looked last while I was outside, it was over 300%.
Okay. Yeah, it ran all the way to 58 cents.
That's so nuts.
Yeah.
That's so nuts. Beautiful play, guys.
Yep. From 12 cents.
And everybody got out without getting wrecked. That's so good. Imagine all the people that weren't on hot trades, that just, up only philosophy, they're on there with their guru, right? And it's like the video that you showed earlier.
Yeah.
Yeah.
30 ticks. Oof.
Damn, dude.
Monies.
You kill it, brother. You absolutely kill it.
Monies.
Now listen, man, if WeBuy can hold this level, I think, wait, did they have news this morning? Was this a news run?
Oh, I don't remember now. Let me see. No, it wasn't. Nothing.
Off. This was just a random.
Just a penny stock that had volume, and then people just FOMO'd. Yeah, you can tell though. Like it looks like the run started last night. So then when people woke up this morning, it dipped a bit, and they just started paying attention to it, and then it took off.
Yeah, when it didn't break down below that level there.
Yeah, exactly. I bet you. Yeah.
Damn, that is massive, man. Where was it? 13 cents?
Yeah, 12 cents. This one. Yeah. Yep. And then breakout after breakout after breakout.
4x returns, man.
Yep.
3 hours. Amazing.
Yep. Yeah. Now it's sitting at potentially lows of the day. That's why you take those gains.
Mm-hmm. Yep. Take the money and run, man. These are momentum stocks.
Yep.
They are pennies for a reason.
Exactly. Exactly. So don't go diamond handing garbage.
Yep. Senis Tech. That was my lesson. Taught me.
Oh yeah. You hate that stock.
Oh, I despise it.
You hate that stock.
Yeah, when they hired what's his name, Mike from Diamond Hotels, I thought, what a perfect CEO to pick up. What an automatic industry to break into, right? With that particular product.
Yeah.
And no, he screwed us. I think he was there for 3 months when he did the first offering.
Mm-hmm.
And it was bad.
Yeah.
I had a absolutely monstrous position in that company.
Yeah.
Yeah. I was pissed at Sharon. She was a really nice lady. And I think that was the problem. It was kind of the core of the issue. She was a really, really nice lady.
Yep. Bet you Bitcoin does something crazy tonight again.
Man, I'm trying to pick up $14 calls for March on Wolf.
Oh, okay.
But they won't sell them to me, man. I know that I'm asking. I know I'm not offering very much, but I still, come on. There's only 100 people that own them. Give me some.
Remember when we were buying this thing at $4? Was it $4?
What, Wolf? No,
Yeah.
it was $1.25, but
Yeah, look, this was it. These are all the drawings on the chart we were
yeah,
playing with.
yeah. Josh, you're buying what? What? Why? Why are you doing that?
Uh,
Oh man, I got ridiculed for over a year before Bitcoin finally popped, right off of the 20,000 and went parabolic, and then everybody's like, "Hey, Josh, so about that Bitcoin and cryptocurrency stuff,"
yep.
and you called me crazy. I'm not talking to you.
Yep.
My phantom internet monies, you know.
That was that's a good looking chart actually. Like
It was beautiful, dude. There has not been a better opportunity to pick up a proxy.
Yeah.
And if you guys can understand, let me just tell you how amazing Wolf is at this point. So they're trading at a negative 39.7 PE. Okay. Zero debt. Zero. Okay. Over 100 million in cash. And they're about to open another 10 megawatt facility.
Mhm.
Dude, this company is out of here. And they will be able to open that facility on cash. They won't have to issue shares or worry about the profits they make from Bitcoin. They already have the cash for it.
Mhm.
This company's amazing. Absolutely amazing. Jeff's been around since the beginning. He trusted. He believed.
Yes. Where's Jeff?
It was just Jeff and God. They believed in me.
Yes. Let's go.
Dude, I am so fired up today, man. Absolutely fired up.
Why?
Well, it's just good vibes, good energy, man. It's been a good
Okay.
couple of days,
Yeah.
you know.
Yeah.
And you know, I work exceptionally hard during election season, and because it's a volatile time in many different aspects. So lots and lots and lots of hard work. And now, you know, I kind of get to relax and like, you know, hang out with my Hot Trades family in the morning and not deal with a bunch of other garbage.
Yeah.
So I got to do in my basement, mostly going to be done by other people, so I can actually still
Okay.
work. And what perfect timing, right? Because, you know, here we are, Bitcoin's going crazy, SPY's going nuts, market's going nuts. Everybody's excited, you know.
Yep.
You know, you've got enemies across oceans that are literally saying, "Hey, listen, we're done with all the violence. You can count us out, Donald Trump." And you know, yeah. I mean, this has happened before the man's even walked in one step into the White House, dude.
Yeah. That was Hamas, right? Wasn't it?
Yes, sir.
Oh wow.
Yes, sir. They and I'll tell you right now, man. We saw this with our own eyes. The man does not screw around. If you're a terrorist organization, that man will come for you.
Mm-hmm.
And he has the tools, all of the tools, you know, and he's not afraid to use them. That's why, dude, you want a bulldog like that in office, man, you know, especially in the most powerful country in the world, because it keeps the monsters at bay.
Mm-hmm.
You know?
Mm-hmm.
And for those of us that live just a normal life, that's the only thing that we have to fear, the monsters coming to get us, you know?
Yeah.
Let's go fly. Joe, you better have closed that right there at that bottom. That first green candle was your key.
Yeah. Or just consolidating at that 200, big level.
Beautiful, dude. Beautiful. Yeah. Now, you may actually get another opportunity because if it can't break back over the 9 right now, you might have another swing for a short going into the close, just like you wanted.
Ding, ding, ding. Market closed.
Oh, too late for you.
No, yeah. Because
yeah, Jeff is always laying pipe. That's how he ended up with so many kids.
Hopefully Joe can hear that. Oh, Jeff, I can hear that.
He's a plumber, you guys. Okay?
Yeah,
he's a plumber. There's a joke there. It's kind of a dad joke, you know. I guess maybe not a dad joke because you don't tell jokes like that to kids.
Yes.
Man, this camera makes me look like I'm on a green screen. This is really wild.
Yeah. Yes.
I cleaned it finally, Blaze.
Mm-hmm.
That's why
Oh,
I'm not
that's why.
screaming.
Yeah.
Yeah,
Okay.
I don't have the halo of light around me today.
Oh, okay. Yeah, because I know you were having issues with it earlier.
Well, it wasn't really so much of an issue as much as laziness.
Like this. Oh, okay. Sounds good. Let's see if anything starts moving after hours here. Slow.
I disagree with that, Pity, but we could get into that, but that would take me a while to explain if you're not actually familiar with what's going on at the border.
It's always interesting how these names start spiking after hours. Spiking.
Oh, Dan, I remember that. That was absolutely delicious, dude. You want to talk about putting a chill in someone's spine? Brother, dude, that's how you deal with it, man. You just go straight at it, right for the throat. Like, here, man, this is your house. We took this morning. You know, like, because it's not like you can find their address in the phone book, you know.
Yes.
Yeah, it's beautiful. I'm looking forward to peace. I'm really looking forward to peace. I want people to stop dying. Like, it needs to happen. It desperately needs to happen. You know, the death needs to stop. The war needs to stop immediately. There's zero excuse for it. Zero.
Yeah.
You know, even Vladimir Putin. Look, you got what you wanted. You've got access to a warm water port. Let's just call it what it is.
Yeah.
Okay? You know, you control these pathways. That's fine. You know, the people there are happy to accept you. We'll leave it as it is. Let's call it a stalemate and walk away, like right now, immediately. No more bullshit. And same thing with Hamas. You know, Hamas has finished screwing around because they know absolutely beyond a shadow of a doubt, you know, that Donald Trump is not going to screw around with them. You know, do not make terror during this man's presidency. Do not do it. You know, bring peace to your lands and let's all prosper together. That's the whole goal. You know, I've said this my whole life. Wars are fought by citizens who don't know each other in order to appease men who despise each other. And I'm sorry, but that's untenable and unacceptable. You know, I will plant my feet firmly in the ground here in America, and my boys will do the very same, but I'm sure as shit not mailing them off to some other place to die or bleed in someone else's soil. That ain't happening, you know?
Yeah. Wasn't that I think Elon was on Joe Rogan and he said the same thing, you know, like war is fought by boys that don't know each other.
Mm-hmm.
And something else like old men that do know each other or something like that.
Yeah, that despise each other. Yeah. He knows what he's talking about, man.
Yeah.
You know, and I love my fellow humans. I love them. You know, we don't all agree. And I know that there are some evil ones out there, but the vast majority of people genuinely are good people.
Yeah.
They're good people. And we generally get along, you know, so we should just do that instead.
Yep.
Let's all get rich together, you know, and make stuff and like fly up into space and like go to other planets and shit, you know.
Yes, please.
Excuse my language, but I am cranked on caffeine. I have no. How far is it going to go? Or is it paused now? I think it's stalled.
It looks like it's pausing now. Yeah.
Oh, well.
Like, who's pausing?
Dude, lot trades power, man. I got to tell you.
Yep. Yeah, let's see what it does. 63%. No catalyst either. Just a random pop. From 22 cents at the close.
See, this is the advantage to being part of a community, you guys, is that we've got eyes everywhere. And I mean, man, we catch these crazy plays. And what's even better is we play them together, you know.
Josh, I have nothing to say to you. Nothing. Nothing. Alrighty. Any last questions for us, guys? Well, more so for Josh. Any last questions? Now's your chance to ask.
Yeah, it's just a few of us in here.
Yeah.
That's crazy.
Yeah. That's how it usually is in the afternoon when we're done playing with the chaos in the morning.
That's all right. One day people will understand that getting rich is not equal to being wealthy. It's just not.
Yeah.
And the value of hot trades becomes more and more valuable as you start to span out into the full capacity of this family.
Yeah.
I go from futures, options, swing plays, momentum plays, long-term wealth building, everything.
Yep.
Everything. The hot trades family has everything, absolutely everything covered.
Yep.
You guys are amazing. Yeah, I'm not doing wealth management, buddy. I don't want licenses and all that. He doesn't either.
Yeah. Nope. Nope. Because then we can't do what we do.
No, Gary Gensler would immediately send me a Wells notice.
Yep.
Like, we're not a public company. He'd be like, I don't care. We're suing you anyway.
Yep. So no, you can't stream anymore now.
Yeah. Absolutely, Mike. I was joshing you a little bit. Hey, good night, JB. Take care, man.
Good night. Good night. What do you have planned for the rest of the day, Josh?
I'm gonna go and take a shower, and then I think I'm gonna sit down at my computer and play a video game, dude.
Oh, that sounds relaxing. That sounds like the perfect.
Doesn't it though? Like, I thought about this earlier, and typically Lucas is in there doing school and stuff, so
okay.
I don't get many opportunities to do it, and I am just starving for some Warhammer 40K strategy.
Yeah.
Like, I really feel like whacking some orcs today.
I like it. I like it. That sounds. Maybe I'm gonna do that tonight. Play some Call of Duty.
Dude. Oh man, so I finally saw. I went and looked at the trailer and stuff for the new Call of Duty, and I have to admit, it does look pretty sick. That Unreal Engine is remarkable, and I don't know if anybody's played it yet. Are the graphics genuinely as amazing as they look? Because, wow.
Yeah.
Like, wow. I just played the new, Forza Motorsport.
Okay.
And my mind is blown by how far dude. I look back to the original Gran Turismo, on PlayStation, and how wonderful we thought those graphics were.
Yeah.
And
very different, yeah.
Holy cow! Now it's like literally sitting in the car. If you got your little VR headset, I don't use them, but if you have a VR headset, I imagine that's incredible.
Yep. Absolutely.
You guys go do your stuff, man. I'm gonna go take a shower and relax.
Me too. I'm tired now.
So
yeah.
God bless you guys. You guys did great today. Well done.
Josh. Thank you very much for coming on and sharing all the knowledge. We really appreciate you. So thank you.
Yeah, absolutely. Well, it's wintertime, so I've got a lot more time on my hands now.
Okay, good.
We'll see you guys around. God bless you all.
Have a wonderful night, Josh. God bless you,
brother. We love you.
Okay. Bye. Bye, guys. Bye, everybody. Bye. Ready? How do I end the stream again? Okay. Bye, guys.